What's up, money mavens? Welcome to episode of Banking Breakdowns, the ultimate crash course where we dissect the nitty-gritty of all things banking. I'm your financial guru, and today we're going to unravel the complex threads of the banking world. We'll be exploring account types, demystifying banking jargon, uncovering hidden fees, and sharing some smoking hot money-saving tips. This journey promises to be both enlightening and entertaining. So, grab your financial floaties, because we're about to make a splash. First up on our banking expedition, the different account types. You see, banks are like the supermarkets of finance. They offer a variety of accounts, each with their unique flavor and purpose. Let's start with the most common one, a checking account. It's like your everyday wallet, but digital. It's great for daily transactions like paying bills, shopping, or having your paycheck deposited directly. But remember, it's not the best place for long-term savings since they usually don't offer much interest. Next, we have savings accounts. These are your financial piggy banks, designed to help you squirrel away money over time. They typically offer a higher interest rate than checking accounts, making them perfect for your emergency fund or big-ticket savings goals. Then there's the certificate of deposit, or CD, the slow cooker of bank accounts. You deposit a fixed amount of money for a fixed period, and in return, you get a higher interest rate. But it's a commitment. If you withdraw early, you might face a penalty. Finally, we have money market accounts. They're like a hybrid between checking and savings accounts, offering decent interest rates and limited check writing abilities. A good option if you want flexibility and growth, but remember, one size doesn't fit all. Your financial needs are as unique as you are. So take time to understand these different types of accounts, weigh their pros and cons, and choose the one that suits you best. Let's break down the perks, the pitfalls, and how to choose the right dish for your financial palate. Ever felt lost in the labyrinth of banking jargon? Fear not, we're here to clear the fog and make things crystal clear. Let's start with APR, or annual percentage rate. This is the yearly interest rate charged for borrowing or earned through an investment, and is expressed as a percentage. Don't confuse this with APY, or annual percentage yield, which also includes the effect of compounding interest. Next up, we have FDIC. The Federal Deposit Insurance Corporation is a United States government institution that provides deposit insurance, which guarantees the safety of deposits in member banks up to $250,000 per depositor per bank. Then we have the mysterious overdraft. This is when you spend more money than you have in your account. Think of it as borrowing from the bank, but beware, the fees can be hefty. And let's not forget about the infamous credit score. This is a 3-digit number that lenders use to assess how well you've managed your credit. The higher the score, the better your credit worthiness. And finally, compound interest. This is interest calculated on the initial principal, which also includes all of the accumulated interest from previous periods. Think of it as interest on interest. It can significantly increase the growth of your savings over time, because navigating banking should be as easy as ordering your favorite fast food. In a detective costume, Detective Dollar here, investigating the mysteries of banking fees. These fees, my friends, are often the silent killers of our hard-earned money. They lurk in the shadows of our bank statements, leeching away our savings without us noticing. Let's start with the most common culprit, the dreaded overdraft fee. Banks love to slap this on when you accidentally spend more than what's in your account. Then, we have the maintenance fees, charged just for having an account. Sounds absurd, right? Next up, ATM fees. These are the charges you incur when you use an ATM that's not affiliated with your bank. And let's not forget those pesky foreign transaction fees for when you're vacationing abroad or shopping on international websites. But don't worry, we're shining a spotlight on these sneaky charges and showing you how to dodge them like a pro. With a bit of vigilance and smart banking, you can outwit these hidden fees and keep your money where it belongs, in your pocket. Now let's talk about saving those hard-earned dollars. We've all heard the saying, a penny saved is a penny earned. But let's take it a step further. A dollar saved could be $5, $10, or even $100 earned in the future. That's the beauty of compound interest, and it's our first money-saving tip. Regularly socking away even small amounts in a high-interest savings account can add up to big bucks over time. Our second tip revolves around the magic of automation. Set up automatic transfers from your checking to your savings account. It's like having a personal finance butler, silently and diligently working to grow your wealth while you sleep. Next up, budgeting. It's not the most glamorous part of personal finance, but it's essential. Think of it as your financial roadmap, guiding you towards your money goals. There are plenty of apps out there to make this task less daunting, so pick one that suits you and start tracking your income and expenses. Lastly, remember to scrutinize your monthly bills. Are you paying for services you don't use? Can you negotiate a better rate on your insurance? Small tweaks here can lead to significant savings. These are just a few ways to save money, but the possibilities are endless. The key is to start now, be consistent, and keep exploring new strategies. Get ready to save and flex those financial muscles. All right, folks, time for your questions. We've been on quite a banking adventure today, and I'm sure you've got some queries brewing. This is your chance to ask away. Want to know more about checking accounts or how to dodge those pesky fees? Or perhaps you're curious about the best money-saving tips. Whatever your banking conundrum, drop it in the comments below. The most intriguing question will feature in our next episode. So get those questions rolling, and let's continue this financial journey together. Drop your burning banking queries in the comments, and I'll pick one for the next episode. Well, that's a wrap on Banking Breakdown's adventure. We've journeyed through the maze of account types, decoded the cryptic language of banking, exposed hidden fees, and shared money-saving tips that would make Scrooge McDuck proud. If you found this financial expedition enlightening, smash that like button, subscribe for more banking brilliance, and share the wealth of knowledge with your fellow financial explorers. Until next time, stay financially fierce, my friends. This is Emma, signing off.